So what's up, you degens? First thing that we're doing today is one, this is my first YouTube video ever, so trying it out. Two, we are going over a few of the strategies that I used recently for intraday options trading. And there are three main strategies that I really use because one, I am extremely new. The things that I've learned have been through Keanu Trade's Discord. If you don't know it, that link is in the description below. And then the other two people that I want to give a shout out to are Coach Dipka over at King Capital and Trading Wars, because they are the people that I grabbed some ideas from in terms of their strategies. Supply and demand zone strategy that I've been using. Shout out to Caleb and Keanu's Discord, who's definitely helped out kind of getting that started. That is obviously everyone has their own way of finding their supply and demand zones, but that's a strategy that I use kind of at the core. But I wanted to focus more on the other two strategies. The first being the Golden Goose strategy through I found through Coach Dipka and King Capital guys, and then the second is the Holy Grail strategy. To do the Golden Goose strategy, it's a pretty simple strategy in terms of the concept. So what I've done, and my approach is a little bit different than the guys over at King Capital. What I've done is a few different things. So you go back, at least for me, to the 3-month outlook, and that's kind of like the hour time frame. And the first things that you're going to do is you're going to find, what I do is find the big areas or the big jumps and extreme moves. So what I do first is I'll find the first big move, whether that's up or down, the further back. So the first one is this one back here. So obviously the swing high and low. Next is the next kind of leg down in terms of the big move down. So that is going to be, so the start of it, I didn't do up here because this is where initially real starts a big move down. So I started this fib and dragged down here. And then lastly, I added a third fib retracement, which is different than the guys over at King Capital. And that one is actually the internal most recent big drop over the past like week or so. So that was obviously this one right here down to here. I know this looks like a lot initially when you're going through it, but when you get down to the intraday trading, so I trade on the 5-minute chart, it's going to make a lot more sense. The first thing that you're going to want to do is, one, go to extended trading hours. And what I do here is I will find some key levels. So obviously these fibs are going to have some key levels, but secondly, you're going to find key levels, whether that's the overnight high, overnight low, previous close, previous high from the previous day, or whatever it may be. So I mark those. After that, go back to regular trading hours, and you'll see, so we'll just take today, for example. So today started right here. The first things that I'm looking for are a few different things. One is I need to have personally like at least 3 different pieces of confirmation when I'm going to make a trade, because I've gotten burned, being a retail trader, being dumb, making stupid mistakes, just thinking that the market's going to reverse or something and trying to predict when that's not obviously the case. I use the EMAs, the 9, the 21, the 50, and the 200. And then on top of that, using VWAP and MACD down here. Any key levels that overlap in those Fibonacci retracements or are really close are more so emphasized as really important levels. Here is where something happened essentially. So the first thing that I looked at was, one, where the EMAs were. So EMA 9's above the 21. 2, it was getting volume, and 3 was that it was still getting MACD movement and the trend was upward, and it was getting support from the VWAP initially. So right here is where my initial first trade happened in terms of going long. So I took a long call there, and I knew this. The good thing about these fibs is that you can use those fibs as other price targets too. So I initially took this right here, coming off of this 0.618, and it went past the zero point 0.5 there. And then when that was going up, obviously you can see it still has momentum, gained more volume. And then here is when it got rejected by my zone that I had. So when I see that and it get rejected and it went back down to this fib line, this is where I took profit. Secondly, when I'm going back through this, we're seeing obviously certain things came back in here, retested, came back down. Wasn't anything crazy, wasn't seeing any major moves. You'll see the overnight high got some support. I was seeing that. So it got some support from that line, came back, tested, got some support, hit VWAP, got rejected from VWAP. And now another big trigger for the Golden Goose is the switching over or the crossing of the EMAs, the 9 and the 21. And so when I saw that happen right here, as well as it being near the two different important key levels in terms of the overnight high and this 0.618, which we saw was a good area to obviously get into long calls there. So this became a resistance support turned resistance essentially. But I didn't join or jump into puts here when it crossed over because we still had this overnight high that was a key area of support. So I actually waited to see what was happening here. And so you'll see down here also that you're getting, the volume was pretty steady here. And then once it came below and gained a lot of selling volume and was below this overnight high and the EMAs were crossed, this is where I entered a put. So right in this area is where I entered a put, and then we got major volume down here. And this was a quick scalp because I ended and got out right here because immediately you saw buying volume come in after that candle. Immediately when it's coming back, you saw it hit and go through this fib line and went up and retested the overnight high. And when it did this, I was waiting to see what was going to happen, but then volume, you'll see down here, started to pick up again on the selling side of things. And then right here is where I came in again for a put on this side of things. And because it rejected this overnight high, which was a key level, and it came down, it was still gaining volume. EMAs were crossed, got volume on this side of things, which obviously confirms a trend. So since it rejected this area, my thought process was, okay, here's this zone. I have some leeway. I think it's going to at least test the point of control, which was 87. So gave myself a little leeway. When you go over to SPY, a lot of the fib retracements overlap and are very close with each other. The first things you're going to see is that the EMA's crossed immediately, which signals a little bit of a downtrend when the 9 is under the 21. And then you'll see my zones here. It rejected off of this zone after it came up there. Didn't get into anything here because there's a lot of clutter between these two areas that are pretty key areas in terms of the Fibonacci retracements and the golden pockets in terms of this area of support and resistance. So I was waiting to see what was happening here, but essentially what I was looking for was one, if the EMAs were crossing at any point or kind of having any divergence. And so once it came through this, which was the previous overnight high, the previous overnight low, it came down. Obviously, it tested this fib. I was still waiting to see exactly what a play was going to present. Didn't really like anything. It was a lot of choppiness early in the morning. But then right at around here is where you started to see some divergence and kind of consolidation in this area. But then you saw some pretty decent selling volume start to come in here. And so I actually took a put Not here because I didn't like it, didn't like the volume, didn't like anything that was kind of presenting. I did like how it was rejecting my supply and demand zone, but I needed other areas of conviction and confirmation. So I was waiting until the next candle, and so I actually entered a put here at this candle, and it was getting some choppiness, obviously, but it got a little bit of support out of this side of things around here, but then it blew through that and ended up continuing down to my next zone down here. Starting to see some selling volume come in this area, as you'll see down here, but then wasn't really sure what was happening. Started to see even more selling volume at the bottom of my zone that I had, so I was liking calls, or excuse me, puts. Wasn't 100% sure. As it came down to this level on the Fibonacci retracement in terms of the key level, you saw it got support right there. And then this is where Trading Wars Holy Grail comes into play. So the Holy Grail essentially is a outside bar followed by an inside bar, or an inside bar followed by an outside bar. And the concept behind it is whichever way the next bar goes, in terms of if it goes below the previous low of that candle or above the previous high of that candle. So essentially it would be, let's see here. So since this was the Holy Grail, and you'll see that this red candle right there is the inside bar followed by the outside bar of this candle, whichever breaks that goes is where essentially the trend is supposed to go next. And so since it broke, as you'll see, below the previous candle's low, that's a signal for a potential trend continuation, or the trend going to the downside that way. I didn't initially take anything on that because it was at a key level with the fibs. As you'll see, it came back up and it tested this area again, and then it came back down, and once it rejected that, this is where I went in and went back down and saw this 411 as the next target, which I called out in the Discord, called it a day, and then my wife came home. So we're ending the video.